All right. Welcome, everyone, to the Forex Beginner class. My name is the PiP Dealer, and I'll be your instructor for the next hour. We're going to go into the Forex exchange and kind of go over and see what these things are all about. The Forex exchange is the largest financial market in the world, really moves trading volume about $6 trillion a day. It's a market where individuals, businesses, and institutions and trade currencies. Forex trading offers many benefits, including market liquidity, 24/5 trading. That's trading from Sunday to Friday on various Forex currencies. However, it's essential to understand all the risks and all the different strategies and proper risk management. Proper risk management is very important when trading because you have to be willing to risk the money that you're going to invest in your stocks and Forex currencies. So I want to start off with some basic concepts that people ask me all the time. What is Forex currency? So I'm going to bring up a chart here, and we're going to check it out. We're going to look at the EUR/USD. What this is the your euro dollar versus the US dollar, euro versus US dollar. So basically, with this, let me take the lines off the chart so I can make it a little easier so we can see. Yes. Okay, there we go. So basically, what we're looking at is the exchange rate between two different currencies. So let's say, for example, I'm going to fly to London. London is GBP, but some other places, let's say I travel to Paris or Germany or one of those countries over there where they use the euro. So if I go over there, then their form of currency is the euro. So our form of currency is a dollar. So if I go to a different country, specifically overseas, I have to take that money and convert it over to US dollar. So in the Forex market, we can trade the euro dollar versus the US dollar. Now, when you come back from Europe, you have to convert that money from euro over to US dollar. So we always look at the conversion rate of one country to the other country. You could trade US dollar versus the Japanese yen. So for example, if you're taking a trip over to Japan, you can pay for your goods and services over in Japan in the yen, US dollar, but they prefer that you pay over in the yen. So when you take a certain amount of money over to Japan, when you go to the airport, you have to go to a place where you can convert the money over from US dollar to yen, so then you can go into Japan and eat and go to movies and whatnot, but you'll be paying over in the yen. So with that being said, you can still trade the different currencies. So Forex currencies, Forex is a short acronym for Forex currencies. So mainly you can trade this market 24/5, which means you can trade it. The markets open up on Sunday at 5 o'clock and they close 5 p.m. on Sunday Eastern time. So the market flows 24/5. Some markets don't do that. You have stocks that only open up from 9:30 to 4:30. So you can only trade them during New York. There's different sessions that they trade in. One of the sessions is in New York. So you're looking at from 9 to 4, that's one of the stocks. Asian session is from 5 p.m. Eastern time to 2 a.m. in the morning Eastern time. But that's every day. And then after the Asian session, then you have London session. So the London banks open up at 8 o'clock in the morning. So our time is 3 o'clock. So if you're trading London, you'd be getting up at 3 o'clock because remember, London is 5 hours ahead. So some people trade London and some people trade New York. I find it hard to trade London and New York because you have to get up for London at 3 o'clock in the morning. And then the markets probably move between 3 and 5. And then 5 o'clock is kind of like a little dead zone. And then when New York opens up at 7, they call it the crossover between London and New York. That's when the most volatility is, the most liquidity, where the most money is being poured in there. So sometimes you have to trade. You have to pick your time when you want to trade, specifically if you're going to be up all night. I know a person that trades from 2 a.m. in the morning to like 10 and he's done. But that's like working a nighttime job. So that's one of the things that they have to do with that. One of the other things that we do is in trading, we sell and buy currencies. One of the things they do is the bid price. So you can bid on something and ask for something. There's a bid price and the ask price. So when you go into the brokers, when you go into trading, you're going to get that and wonder, okay, what am I doing with bid and asking? Well, the bid price is where at which you can sell a currency pair. So if I go back to EU, right, you can see that this market here, if I put a line right here is where, and I put a little ellipse here. This ellipse here showed where the market hit its peak, like a ceiling, and then it hit its peak here again, the ceiling, and you can see that the market dropped from this point here. So you can see that the market came down here, right? So in this particular example here, if you were to, let's see if I can pull up a guy. Where's my people at?
John, while you're doing that, may I ask a question?
Yes, sir.
So, just around the room, I just want to know, you know, who here is, are you familiar with this in any way, sir? Okay. So some of what you're saying is not necessarily above our heads, because I'm a novice at it too, but like explain why it's important to trade at certain times of the day versus in other countries, you know, because you're saying you do it 24/7. So if you're able to trade all day long, why is it important to know what times of the day for us here in America?
That's a good question. That's a good question. So what I'm going to do is I'm going to bring up a horizontal line, and I'm going to bring up, let's say, we're going to go back to, let me go back over here.
Have you seen any of these charts before? Do you know he's clicking on it, sir? I was about to say, do you know, can you explain the squiggly lines in the dot?
Yeah. Yes.
Yes.
So the question that you asked was a good question. So think of it like this. So in Europe, I'm going to choose. Let's do this here. It'd be easier. I'm going to choose the GBP, Great British Pound. That's probably a little easier. So I'm going to go with the Great British Pound.
Okay.
So the Great British Pound.
You understand the graph or whatever?
So when I'm looking, before we had the EUR USD, so I'm going to use, I guess it might be a little easier to understand because I kind of went into it earlier. This is a GBP versus USD. So this is the pound versus the dollar. So if I go over to London, if I take $5 over to London, I have to convert it over to pound in order to pay for goods and services over in London, in the UK. So to Brian's question, when's the best time to trade this pair? The best time to trade this pair is during London because the London banks are open. So the London banks govern this particular pair. So you can trade it in Asia, but London is the time you want to trade it. So if I was to go, let's say I went to, I'll get to the hour chart later, but let's say I wake up at 3 o'clock. So I'm looking for 3 o'clock in here. The 3 o'clock's right there. See that there? So I'm going to pick this day, this random right here. So this is February 21st of this year. So February 21st of this year, that's when this market opened up here. So every day at 3 o'clock, it trades, London trades. So if I go back to Thursday, it's Thursday right here. See that? Thursday. So this is Friday. Let me mark it up for you so you can see what I'm talking about. This is Friday. Friday, London open. London open here, okay? Then I'm gonna put London open here. So the best time to trade London is 3 o'clock. That's the best time to trade London. So I'm gonna go over here and put Wednesday, where's Wednesday? Wednesday's right. Wednesday at 3 o'clock, this is right here. Okay, so there's 3 o'clock there. And then I'm gonna go to Tuesday, which is right here. And I'm going to put a line here, 3 a.m. over here. And then I'm gonna put one for Monday 3. Yeah, so these are all 3 o'clock. Crossover times when the liquidity, I'm gonna show you that. when New York and London cross over. So you've got the London market. When the London market first opens up, you can find a good move. Like I said, a lot of it depends on how the market's moving that day, and it depends on if there's any news or anything like that. But if you were to trade London, then you would be getting up at you'd get up at 2 o'clock, 1 or 2 o'clock, somewhere in there, like around 1. Let's see, like you get up here, and then what you would do is you basically would look left. Where's my arrow? You would look left to see what the market's done. And then you would create levels. You would draw highs and lows on the market to see where the market's going to, have the market hit this area or have the market hit this area. So when you get up at 3 o'clock, you're looking, like I said, left to see previous history so you can try to see what the future is going to be, if that makes sense. So what you're trying to do, you can't predict where the market is going to go, but you can use your indicators, you can use tools to help you guide to where you think the market is going to go. So if I was to, let's say, for example, if I was to, let's see if I can move this up here. Where's it at? Here, this. All right, here. Let's say, where's my eyes at? I was looking at, all right, let's go over here, this dude. Let's say I have a dude here, right? So I hit the dude here. Right? So the dude is the dude wants to trade. You don't know what this here is because it hasn't happened yet, right? It's the new week and you're looking to see what happened here. This means that the markets have already made this move already, but you don't know where it's gone yet. So you're trying to figure that out. So in order to do that, like I said, you have to look left to see what the previous markets have done. So what I would do is I would come over here, and what I'm doing here is called technical analysis. The technical analysis means that I'm using technicals to help me try to figure out where the market's going to go. I'm using highs, lows. There's a whole bunch of terminology. Pattern, right? A whole bunch of.
So is this one of those things where you're trying to buy low?
Well, I need to find out if I can buy low or sell high. So I don't know that yet. So, and let me write that in there because what you want to do is I want to try to determine, I can put over here this. Let's see. Try to determine where the buy and sell zones are. Does that make sense? Because you don't know where the buy and sell zones are. Over here, you can see that it went up a little bit, right? Because a market could do three things. A market could go side to side, which means that there's no, but that's called consolidation. That means there's no buyers and sellers in the market. It's just flat. Or a market could go up because of buyers, or it can go down. So if I come here, right, and let's say this is where I'm at, right? That's the first, this line right here is where the market opens up, and I'm right here. So what I would do is I would go back over here in the past and look for the lows and highs.
I have a question.
Yes.
Is this also called day trading that your dad did?
Yes, it is. Yes, it is. So if I'm looking to see where I think prices are going to go, I have to put some zones here. So I put a zone here. That's, I'm going to put it down here. Because in this screen right here, where's the lowest point at? Over here, right? So I'm going to put a ellipse here. The reason why I'm doing this is because I want to see where the low is. So this is a low right here, right? This is a low area, right? Low, I'll put a low here, right? I don't know if it hit lower than that. It hasn't, you see? In this frame I'm in right now, it's a low right there, see? It does come back over here. You see that it touched this area again. So you can see that, clone this. So what do you notice in this? Let's see, let me move this out the way, like that. There we go. Okay, so getting ahead of myself here. We're over here. So what can you tell me that's happening in this picture right here? What do you see?
At some point in time, it bottomed out.
Bottomed out, right. Okay, so it bottomed out here, right? So price came to this area right here, and what happened? It went up, it kind of did some funky thing, and it came back here, right? So this here's pattern is called a double bottom. It's just what you said. It bottomed out at some point, right? So it's a double bottom. So let's say I was at this location, this here, it hit here on January 21st at 7 a.m. in the morning, right? So if I jumped on this chart and looked here, right, I'd wait till price come all the way over here, and then I would enter the trade right here. That make sense? This is an entry right here. Let me make it a thing here. This is an entry right here. I would enter a trade, enter a buy right here.
Isn't it already back?
So let me break that down again. Let's say that this is January 21st, right? And I jumped on the charts at 7 a.m. in the morning right here, right? Got my coffee and I'm looking at the chart. I don't know this hasn't happened yet, right? Hasn't happened yet. I jumped on here and I said, you know what? I'm gonna wait. I'm gonna wait until the candles come back to this zone right here. So I wait, and price comes back to this zone right here. So it's like you driving to the store, coming back and driving back to the store. Like I said, it bottomed out. So it hit this low here, hit this low right here, and you see that it came all the way up here and hit this low back down here. That make sense? So like you said, it bottomed out. It didn't go below this line here, right? This line here is called support. It's like the floor. Or the floor, right? So if I'm looking for a trade, now what I'm doing now is marking up the chart and I'm going to be trading manually. So if I'm looking for an entry of where to buy this market here, I'm looking here because this is a pattern. This is a pattern that is called a double bottom pattern. So when you have a double bottom, the reason why it's double bottom because I have it hit here one, it hit here two, and it's on the bottom floor. So when this pattern, if you see this type of pattern, most likely the market's going to go up because it's a double bottom pattern. Any questions on that? So what you see is this. Oh, I'm going to get into it. Price comes down here, right? And you see it broke this floor here, right? So it keeps coming down here. This is consolidation right here because it's going side to side, right? So when it got up to here, I'm looking for the next time it hits this line. If it came hit here, I'd get in trade here. But it took all the way over here to hit this line, right? So this area right here is my buy area.
Is that hours later or is that days later?
This is hours later. This is an hour chart. So that's a good question because on the chart you can trade on different time frames. You can trade a minute, 5 minute, 15 minute, a daily, the monthly, weekly. I just chose the hour time frame. So because like, you know, she said that you're trading daytime. You know what I'm saying? So this was at 7 o'clock in the morning, right? And this, let me see that one. What day is that? What day is this? This day here is at 12. So someone said, how do you know what time to trade? Well, London is 3 to 12, 3 a.m. in the morning to 12 p.m. That's London time to trade. Every day, London time. So the moves will happen. If there's going to be any moves happening, is going to be happening between 3 and 12. This happened at 7 o'clock in the morning. It's a little bit before New York. New York opens up around 8 or 9. So if you're waiting, okay, so you see it hit over here at 12 o'clock at night. So you see that it went up. So you see it's trading during London. So at this point, at 3 o'clock is when they push the money into the market, the banks. The big banks push trillions of dollars in the market when the market opens up at 3. So this overflow is from Asia session, which Asian session is a little bit slower markets. But the London session in New York is when they push more money into the market. That's when you want to be trading. That's the most volatility is in the market. Volatility is when you have more money being pushed in your pocket. It's like me throwing $6 million at you, you know, $6 trillion. You're getting more money. You're getting more action. So if you were to trade this, you would wait. If you was here, you'd wait till it hit here, right? And then you would trade this up, right? Now you're probably saying, well, how long do you hold on the trade for? That's up to you because you're risking your capital. So you have to decide, okay, if you have $1, right? If I have $1 and I can make $10, I'm gonna do it. If I lose $1, I'm okay with that. So I go 1 to 10. If you have $100, are you okay with losing 100 to make 1,000? I am. If I know a setup is good, this setup is good right here. So you're only looking for good setups. This setup right here, if you had $100, you can make 1,000 in 2 hours.
Would you do the same thing with your piece as well?
Yes. Well, here, let me get that. This one here, because I'm trying to find out. It's almost like you're traveling, right? And would you rather be running to the airport to catch the airplane, or sitting down waiting and until they call you up so you can casually walk on the airplane and take off? You know, running down the road to try to catch the railroad, you know, the train. So that's called catching the trade late. This is a perfect entry. That's a perfect entry right there. Because you see, once you get in here, that trade took off, right? So at this point, you're looking at the floor. You're looking at double bottom. Double bottom, again, is because it hit here, 1. If it comes here, 2. So if I go down the chart down here and hits this one again, what's that going to be called? Triple bottom. So watch this. That's going to be another entry. So I'm going to go look for that on the same line right here. We're looking at this yellow line right here. I'm going to make it thicker so you can see it. Check this out. So this line here, I'm going to make thicker because this is a zone. Okay, watch this. I'll make it thicker. It's thicker, see that? So now I go down the line here, and I'm looking for the next hit. You can trade these upper ones up here, which I'll show you how to do, but I'm just looking at this right here. Because if you catch this trade here, that's a nice trade. You know, until it comes back to this line here, that means there's a buy zone. If it comes back to this buy zone here, that's probably going to be a nice setup for a trade. So I'm going to go over here and look. If I go down this road here and look, right, I'm looking. You see that this trade here is going up, right? It's going up. It's steadily going up. At some point, it's going to come back down to this line here. But at this point, it's not. Right? You see that?
Going up and up and up.
See where it is now. So now what you would do is, if you took this trade, so now that's probably going to be that last run of this. So if you took this trade here, you probably would be managing it. So you'd probably be managing it, letting it ride. Or you would go, okay, you know what? I need to figure out another zone here. That's the zone here, but there's zones up here too, right? You see how I drew this line here, right? How I figured it out. So then if you get in here, you're going up here, it hit this here. This is a ceiling. It can't go any further than that, right? So that line hit a ceiling. That's called resistance. So if I draw a line like this, there, you see where that's resistance right there, right? That meant that it couldn't go any further than that. It's like block. So if I come here, this is a resistance area, like a ceiling. This is called resistance. So these terms that I'm using are technical terms. So my thing would be, okay, That's rejection. So what happened here? What happened here? It went all the way up here, and what happened? It rejected. Couldn't go past this line here, right? So this is a cell area. So you see it went down. So if I'm looking at this here, right, and it got up here, you can see that there's a whole bunch of candles up. It's like a traffic jam. Show you. Make it bigger. Right, you see that? It couldn't go any further. How many candles are up here? So you got it in this chariot here, and boom, went all the way up. To here, stopped. It couldn't go, you don't see a candle above this line, right? There's no candles above this line. What does that tell you? That it's rejection. That means sellers are coming in, pushing it down now. The buyers were here. The buyers had their run. Now the sellers are pushing it down. The sellers are right here pushing it down. So this candle here, wicked up here, it's like a little wick on it, and it hit resistance, which means that I can't go any further, right? It's like I'm hitting the wall. I can't get any further than that. So this candle, 1, 2, 3, and you see it went down, right? There's a pattern in here. There's a pattern in here that helps me determine that it's a strong reversal. A reversal is when it turns around. So you see it's going up. You got here, right? So you got here, and you saw it reversed. Went down. So this is a sell area here. So that's a strong sell area. Question?
Like further along it goes like way higher. How would you predict that it was going to go that high?
Up here?
No, on
Over here? Well, that's the thing. So let me put that there.
I would think the cell right there, right?
Yeah, that's a sell area.
It comes down a little bit, then it goes all the way up.
So with this here, this is a sell area right here. So here is where I would sell. Sell area. So if I'm looking at this sell area here, again, when you're trading, you don't want to be in the markets all day long. The more you're in the markets, the more you expose yourself because markets change. So you're always looking for a good setup. This is a good setup because you can let it run. This is 12 o'clock. If you're running doing London, you're probably already up already. So if you came from over here, you are already ready for this setup already. You see what I'm saying? You came from over here, right? So since you're here, you patiently, because this game is a patience game. You have to be patient as all day night. You have to be patient. You got to let price come to you because you can't chase it. You must let it come to you. So you here and you wait. You sit on your hands, you wait, and then the market comes over here and boom, hits here. Then you get into a trade right there.
So like when you're right there, so when you get to your next peak over,
This one here?
think like the sell there, how would you predict that it was going to go that much higher without coming down at all?
Well, that's a good question. So now, before I say that, you see how I made these two zones here, right? I created this zone and that zone here, right?
Correct.
That zone came from up there. So to answer your question, I have to draw inner zones. Because you said, okay, we know it went here. How did I not know that it wasn't going to continue to tank, right? Like this.
Or you back on
Or go back up, right. So what you would do is, when you're trading, you would have gotten this sell right here, right? And you come down here. So it hit right here. So I would draw a line right here. Because that's where it stopped, right? So that time is at 7 in the morning. So if you're trading, again, depending on when you're trading, if you're trading London, you're already up at 3. You're up from 3 probably to 7 or 8. So if I saw this here,
you wouldn't think that it was tanking at that point?
no, I'm going to tell you why. I'll show you why. I'll show you why. When this hit here, let me move that line if you can't see. Move this line. This line out. Okay, so move this other way. Just trying to make this bigger so you can see what I'm talking about. Okay, so let's go back and look at this for a second. So this sell area here, right? So sold all the way down. So here, the bigger candles you have are bank candles. So you see these little thin candles here? When you get candles like this, that means that you have a lot of money in there. These are money candles. They're called bank candles. They're big. So you can see that this is a red big candle, right? What do you notice? Let me make that candle bigger because I want you to see something. You're going to be able to see something that's going to show you something. Now remember, I'm getting it more into the technical analysis of this, but I want you to see this so you can see what I'm talking about. Right, so the red candles are sellers and the greens are buyers, right? What do you notice about this candle right here? It's long, right? So you got a body and a wick. The wick are the small little lines here. The body is the whole thing here, and the wicks are the skinny part right there. So when this candle formed, this candle went all the way down to here. But what happened? It pushed up. So it rejected right here. This was if you look at candles, you'll see candles that have long wicks, and you'll have candles that have strong bodies. This candle here is a bearish candle, but if you look at this wick right here, what did this wick do? The wick touched this line, right? And then went it back up. So that's rejection. So if you're in this trade and you would take this trade, right? And let's say you were still in this trade, and let's say you were monitoring this candle in a live trade, and you seen how this candle's moving. Right here, this wick right here would tell you that it's some issues going on here, because the sellers are going to be pushing down, right? They're not pushing down. So the buyers are coming back in here because this candle, right, this wick right here, it moved all the way up. So basically what happens is you'll get a candle that will go all the way down, but then if it's losing exhaustion, it'll go back up. Buyers, so the buyers are coming back in here because this wick right here is pushing up. So that's one way of determining that there's probably some buying pressure coming up at that point. So when this candle closes, this candle opens up, right? So this candle closed and it wicked right here. So the same way we saw before, if I go back over here and look to see where it hit, that's probably another zone. That's probably another buyer zone. If a candle, you see how these candles over here close below this? That's in a way telling you that it's possible that there could be a reversal coming down. The price could go lower down. I have to see a full candle close below that. These two did.
That means you've lost money right there, right? You've lost money at that point, correct?
Well, no. The thing is, like, you asked, how do I know that this wasn't going to go further down? Because this candle didn't close below this line. You see how this candle closed below this line here? This one did not. So it rejected off it. Does that make sense?
Yes.
So if this candle was, like, say, this candle came out here and closed below this line here like this, then it's possible that it could continue to tank. But I'd have to have a candle close below this line. Right in here, right, and then the wick would be a body. There's no wicks over here, right? Straight body. This has a wick. And plus here is showing some resistance. So when I'm here, at that point, I have enough data to say, you know what? I believe this market is going to continue to reverse.
You would invest again there? You would invest again there?
Right, yeah. Now, that's if you're watching the market at a point. If you got in this sale right here, because you get like 4 to 5 good setups a week. And we just found, this was 1 here, that's 2, that other one over here was 3, right? That was in a week. So you can go down the line. This is called back testing. Because I'm looking to see, because questions was, when do we trade? Each set is different. Some people trade London, because somebody works 9 to 5, they can't trade New York, right? They got to trade London or Asia, when they come home, come at 5 o'clock, take care of the kids, whatever else. They can trade at 6 o'clock, to 11. Or my brother works 3 to 12, perfect scenario for him to trade. You know, I trade in New York because I'm a New York person. I can't get up in the morning at 3 o'clock and then come back and try to trade New York. So this GBP pair moves, like I said, between 3 and 12, 3 a.m. to 12 p.m. So you see this is 11 o'clock. So it's getting ready to move here. And you never know when the move's going to come, but you use your technical analysis. Technical analysis means that I'm looking at the chart and looking for patterns. All them questions you asked, I'm looking for patterns. You said it bottomed out, right? Bottomed out here. That's why that was a good point here. So I'm going to go back here and look to see if there's any traffic down here someplace. There's another place here somewhere down here in the past that's going to tell me that this was a good entry. Does that make sense? I'm looking for another double bottom. So I'm going to go back, look, and see. And I want you to see if you can identify it for me. That means it hit somewhere right here someplace. That's a possibility where it hit here. Here, you see that? So what that mean? What is that telling me? That this here is this here is a good zone. It's like being on a street, lots of traffic. You like that? So every time price comes here, I'm buying. If I don't see a candle close below that, or if it's coming back up. So it came from down here someplace, right? So this is an uptrend coming this way. I don't know if you can see that. Let me see, Megan.
Is there ever, this is money, so it's always going to continue to go up, right?
Sometimes it'll go down.
I mean, but you can't technically lose money or anything.
You could if you get in the trade the wrong way. If you jump in the trade at the wrong time, you can lose money. So when you find the entry, then you have to use what they call risk management, which means, okay, I'm looking for what, a 1-to-2 ratio or a reward to ratio or 3-to-1, 5-to-1. I try to go from 1 to 5 all the time. So if I'm putting $10 in here, I'm okay with losing $10. My goal is to win 50. If I do 100 here, if I put $100 right here, it's like going to Las Vegas or a horse and put $100 in. If I put $100 in here, I have to have the reasons why I'm taking this trade. Because I know if I took a trade right here, I already know it's going to go up. And I'm going to make my $1,000 or whatever I'm going to make. Sometimes you're going to lose because the market could trade against you. But if you have what they call confluences, confluences are the reasons why I'm taking this trade. Like everyone fires the reasons why. So if you take a trade, I'm going to ask you, why is this trade? Why is this trade, John? Because you told me it bottomed out, right? So here, so if I come over here and take this trade right here, why am I taking this trade? Because it went all the way up here. It came back down here, right? Oh, actually, it came back down here. But it came back to this point again. This line here is the lifeline, right? So if I see traffic here, if I see a bunch of candles in this area, I'm going to be very curious to see what's going on here. So when I look here, that's another buy zone. When I got to this area up here, it's a sell zone because it couldn't hit. Then it came all the way back down here. And as we said before, had that long wick. So that told me that the buyers are coming back in the market. Buyers coming back in the market, I'm going to go back up again. So there's something else that we use called candle patterns. Candle patterns help us determine if you're going to see a reversal or not. And there's a candle pattern here that told me that this was going to reverse. And it's called a bearish engulfing candle. I'm going to show you what that means. I'll pull this up a little bit. Bearish engulfing candle is, because remember, you see all these candles here, right? They're all patterns. All patterns. There's a book called the Japanese Candlestick Bible. It shows all the patterns. You can find out how things are going to move. This red candle here is a sell candle. So when the market's going down, it's bearish. It's going up, it's called bullish. So you see this little green candle right here? This little green candle can fit in here, right? You see that? I can put this green candle inside this red candle, right? These two candles right here, it's called a bearish engulfing. Engulfing candle is a big candle. This is an engulfing candle. Engulfing candle is a big candle. It's engulfing. So if I put a little bitty green candle here side by side at a resistance zone, Because if I came up here, remember I was coming up, and I hit here, resistance, I can't get further than this. So this is called the ceiling, cell area. So I sold off here, right? Because of the resistance, and because this is a bearish engulfing. Bearish engulfing means I can take a little bitty green candle and fit it in here. And then you see it and it goes down. And there's another bearish engulfing here. This little green candle right here can fit in here. So it's continuing to going down. This is a bearish engulfing right here. This,
Is that how it always is?
when you have a cell area and you have a major sell-off, you're going to see a bunch of different patterns. You might not see a bearish engulfing in there, but I got 3 bearish engulfing candles. I got 1 here, 2, 3, 4. That's when the trade's going down. But then, okay, well, why isn't it going further down? Because I have this wick right here. You say Black Lives Matter? Well, wicks matter.
So it's like, how do you not panic, dude? Like, this is so...
Well, then that's part of, there's a whole theory to this trading game. It's mental state. You got gangsters that can't even do this because they need to have faith, patience. You have to have faith. And I know my guys here are faith guys, you know. You have to have, first of all, you have to have faith in the Lord. You have to have that. That's first thing. If you ain't got that, you can't trade. Second, you have to have patience. You have to have patience. You got to be the most patient person in the world. You cannot be erratic or you'll lose. You got to be patient. I mean, you got to wait. So what happened was, I said before, how long did I have to wait? How long I had to wait? This is an hour time frame. Look what I had to do here. I came in here, right? Let me see what that is. Look how patient you got to be. But patience paid off, right? At 10 o'clock in the morning on February 3rd, I jumped in this trade. February 3rd of this year, 10 a.m. And I won pretty good. This ran all the way over to Tuesday, right? Right, to the sell area here, right? Then it came back down. So I got this area won this Monday. So Monday, I got coffee or whatever, This trade up here, boom.
You would leave your money in there that long?
That's called, yes, I would, but that's another part of trading. That's called when you're managing your trade. It's something different. But you're right. So I took this trade and I managed it. I moved my stop loss up and I protect my capital. So when I'm winning, because you see it came back down again. So it's up to you what you want to do. It's your risk.
I thought what they said you had to sell it by the end of the day.
No, that's when that's kind of like stocks, but that's something a little different. It's something similar to that. But when you're doing Forex trading and you're taking a trade, you're trying to protect your capital. And at the same point in time, you are trying to do money management. So money management means that you're trying to manage this trade. We don't know that it's going to go up here. You don't know that, right? If you're getting this trade right here, do you know it's going to go up that way? No. You just know there's a buy zone. And then you just play it by ear to see how it goes. It could go the other way on you. It could, but that's part of the trading. All traders lose money. I've lost money. But you try to balance your trades out. You want your winning percentage to be good. See, at one point I was at 50% losing. But I went through here and started to learn the candle patterns, learn the theory behind things, learn when to trade, learn when to catch a trade, when not to get in a trade. Because you can't trade every day. You don't trade every day. Some people trade every day. They trade all day every day. That's just putting yourself more at risk. What you want to do is find the optimal trading patterns.
Yeah, my neighbor lost everything.
So that's what you want. Because it's greed, because they don't understand greed. It's like going to Las Vegas. It's possible because I know a dude, that's right, that came and said, "Oh, Jay, man, I got $20,000 right here, man. I need your help with the trade." I'm like, okay, where you come from? I came from my mom. I came from my wife and us trying to put together a little something, da-da-da. I'm like, does your wife know you're trading 20 grand? And you, no, she don't know, but I want you to help me trade. So I'm not going to be trade that. You just got to, don't do it. I told him not to do it. So don't do it. He wouldn't done it. And one day he lost 20 grand because he went all in. He didn't go with risk management. He didn't go with patterns. He didn't go with any stuff I told him. I told him not to do it. I said, well, if you're going to do it, your wife will be married to you anyway, because that's the money they use to help you, build a house, whatever. I said, just take a little bit of money. I said, don't do it, but if you're going to do it, make sure you tell her and take a piece of the money and then trade it this way. But I'm not telling you to do it. I'm just saying, if you do it, go tell your wife first. He didn't do that. He just kind of went ballistic and did that. And then he lost the trade. And he lost money that him and his wife was putting together. My point is that he got into a trade like here. The trade's already taken off already. You're late. He got in here, right? And it's like, well, you know what? It looks like a sell. How you know that? He got in here. You're too late. You should have been here. You should have been in here. The sell's too late. He can't get into a trade here. It could go this way, but this is consolidation. This is no man's land here. You don't take a trade here. You wait till it hits these areas, these particular areas of where you want to trade. That's what if you're doing manual trading. That's if you're trading manually on the charts and you're looking at the charts every day. That's what you're doing there. So again, he didn't see the engulfing pattern here. If he would have got in here, he'd have flipped that 20 grand to 100 grand easily, because he would have had the higher unit of measure, and then he would have got this trade here. But he got here. There's nothing here. This is called consolidation. See how dead it is? Look at these small candles. It's dead. There's no money here. Where the money came? Right in this area right here, these big green candles. So the buyers are still trying to push it up.
If he would have stayed in, he could have made money.
He could have made money, but he didn't. But you can't trade that way, and you just can't do it that way without knowing. You have to know the rules. You have to know the patterns. You have to know when to trade. You have to know how to trade. You have to know and then fundamental analysis is also perfect too, because that's Trump blowing up Ukraine or whatever else, war, oil, that type of thing affects different pairs. If in London they're having a strike, then that might affect the way the GBP is going. You know what I'm saying? So you have to know those things. Yes, sir.
They're going to stop for a minute, so he needs to move the truck because they're trying to play basketball. You park right up the pole. Oh, they just take a break for a minute.
Does that make sense what I'm saying to you?
Huh?
Does that make sense?
Yeah, I'm understanding.
Is it too